Well, good afternoon there, traders right around the world. Thank you so much for joining me in this Wednesday afternoon market recap. Really, the theme of this particular video is really addressing the overhead resistance, the varying degrees of overhead resistance, which all three of the US markets are starting to rally into. Those three levels which I'm going to address are the simple moving averages, the exponential moving averages, and also Fibonacci retracements based off the sell-off we've seen from mid-September all the way through to most recently mid-October 2014. Now, as you can see, the Dow Jones Industrial Average was down 150 points, the S&P was down 14 points, and the Nasdaq was down close to 40 points. When we start looking at these three key indicators, you can start to see the reasoning why. Also, what I'm going to add in there is, of course, support and resistance, our horizontal levels of selling and buying pressure. Now, as you can see, once I start bringing up these simple moving averages, you can see the Dow Jones Industrial Average has simply rallied back up, and it's starting to test that 200 simple moving average as old resistance or new resistance, which once acted as old support. You can see also on the S&P 500, we're starting to rally up to the 100 simple moving average, and when we address the Nasdaq, you can see it's also starting to see selling pressure right around that 100 simple moving average. Now, these simple moving averages are really dictating the long-term trend of the market. So when you start testing these levels from the bottom and you start seeing candlesticks such as this, you really need to start paying attention to what could be around the corner. When I start to bring up the exponential moving averages, again, we've been touching on the fact that the markets still need to, of course, interact with the declining 50, 20, and 10 exponential moving averages. Now, as you can see, as at Wednesday afternoon, you can see we're seeing selling pressure right around that 20 exponential moving average. We've seen a little bit of an inside day on the Dow Jones Industrial Average. When I change the S&P again, you can see we've interacted with that 50 exponential moving average almost to the penny. And when we address the Nasdaq again, you can see that bearish counterattack right off that 50 exponential moving averages. Now, the markets are doing exactly as we expect. We've expected the market to rally. Now we're starting to address the fact that what could be taking place at this level is going to, of course, dictate where the markets move, at least for the intermediate trend moving forward. What I can also do is bring up the Fibonacci retracement boxes. Let me just go down to the Fib retracement tool, and I can start drawing on Fibonacci retracement levels where it makes sense to see the market retrace to before we start seeing selling pressure come back in. What we have is the 0.382, the 0.5, and the 0.618. That, of course, is on the Nasdaq. You can see right now that candlestick has almost hit it to the penny and started to sell off. If I change that to the Dow Jones Industrial Average, I'm going to draw this for you right away based off this candlestick low right here, and the candlestick or the candlestick which ushered, of course, the bearish retracement which has come into the market most recently. You can see the same sort of picture start to show up. These are both the three levels of the Fibonacci which traders pay attention to: the 0.618, the 0.5, and the 0.382. And you can see that the Dow Jones is only starting to influence and interact around that 0.382 level. If I change that to the S&P, I'll do this one final time for you in this market update. I'll do the Fibonacci retracement level based off this candlestick right here and this particular candlestick right here. You can see once I draw in this box or this rectangle right here that we're right in the center of that Fibonacci retracement level. Again, you can see those three levels on my screen, which I've just highlighted for you. So you can see my reluctance anyway to trade the upside of the market with so much overhead resistance still waning on the market moving forward. Now, we're going to address the fact of the simple moving averages. These are distinguishing the long-term trends. If I change to the exponential moving averages, these are really setting up what could be the next wave of selling pressure. Now, again, we're not there in the way of market confirmation. This is going to take a couple more days, but it's very interesting to see how the daily candlesticks are really sort of playing out at these key levels which we've been speaking about and which I've been updating you really for the past 2 or 3 weeks, at least anticipating this bullish move. Now, again, this isn't enough to start looking at short positions. Sure, if there's short trades out there, you can look to start setting up contingent orders. Personally, at the moment, I'm still sitting tight. I need more movement or at least more price data before I can start really getting behind either bullish or bearish trades. At the moment, it's really up in the air. I'm very, very neutrally positioned in the way that I'm not in any trades at the moment. I'm just looking for, of course, the right time to cherry pick individual trades and, of course, arbitrary momentum trades on the overall indexes when they present themselves to us. All I'm going to say at the moment is that, look, the market is acting as we expect it to. It still has room and it still has legs to move higher. I'm not discounting that at all. It can potentially run up as high as around 16,900, maybe even 17,000 on the Dow Jones Industrial Average, even as high as, just shy of 2,000 on the S&P. The Nasdaq, again, has got quite a fair distance to still put in that lower high, but we're getting very, very close nonetheless to, if this market is going to make that retracement, if it's going to set up that terminal reversal pattern across all three of the markets, we're getting very, very close to where that location, where that point, that inflection point, that pivot point on the price chart is set to be. What makes this is very, very interesting also is that Caterpillar is reporting earnings. So please stay tuned to that particular stock. I'll give you an update on that once earnings is released. The same is true for Amazon. Now, again, there's a lot of speculation as to what Amazon is going to do. A lot of people out there in social media are saying, look, it's very, very bullish. I'm actually sitting on the other side of the table. Now, I don't have any vested interest in Amazon. I don't hold any positions in Amazon. But if you see Amazon gap down, this could be a very, very good trade down to these lower levels of support, starting at 280, then we're going down to 274, down to 260, ultimately down to about $250 a stock or per share on Amazon, if in fact the earnings report is interpreted negatively. Again, Caterpillar has already made a very, very decent move from those old sell short or put entries, which we started placing around 98, 91, and as high as about $100 a share once we saw the breakdown of that gap moving back into September 2014. Other notable stocks which are in our top 12 individual trade list in that pro class are Apple. Apple again is really struggling to move higher. We do have an earnings gap, but again that higher wick this or today's session really takes off from yesterday's trading session or the day in which it released its earnings. A very nice gap up, but it looks as if it's starting to see some failed follow through to the upside. That should be a very, very big cautionary signal to anyone who is wanting to buy Apple long for the time being. It does need a little bit more time to shake out in the way of price before we can start looking at both trading bidirectionally on Apple. Baidu again has moved back into no man's land again. You can see that bearish counter attack, exactly what we expected. There's been no trade on Baidu for this week. That is what we addressed over the weekend. Disney started to see the same form of candlestick take place at that resistance level. Is this setting up a new lower high relative to the lower low it's set up in August 2014? That is soon going to play out for us. FAS is doing exactly the same thing. This perspective box has been drawn for the better part of 2 or 3 weeks now, and you can start to see it's just coming up to that place where we expect a slowdown in FAS and potentially where you can see that rollover taking place again, that 50 exponential moving average. If I change to the 2 simple moving averages, you can see the 100 again acting as selling pressure for many of these individual stocks. Now, Facebook has rallied back into resistance. Earnings is coming out next week. It's coming out on the 28th. So I don't think there's going to be a trade in Facebook moving forward. What we need to see is the earnings gap, and then we'll analyze what price is doing. If Facebook gaps down, it's going to be an absolutely incredible trade. If in fact Facebook gaps up, it's probably going to be an even better trade because we'll be gapping over very long-term resistance, which has been in front of us since July 2014. Generally, when you see a gap over an all-time high, it's a very, very good signal to go long. Again, I will address that for you moving forward. Google has seen that snapback, which we've been expecting. We did have that 517 bearish entry hesitantly placed coming into the trading week based off the fact that we expected the markets to rally. As you can see, Google is simply moving back into those declining exponential moving averages also. You can see that upper wick taking place right on that 10 exponential moving average. Not a whole lot of trade setups in the way of Google. Howler's got a bearish counter attack, almost the bearish engulfing at that resistance level, right where that 20 and 10 exponential moving average. This, my friends, is setting up a trade for us. I will address that over the weekend. Netflix again is trying to counter move into those declining exponential moving average based off that horrible earnings report which it released late last week. Again, I do not have the kahunas to be trading bullish in the face of such a bearish gap and an overall weak looking market. Things can change, however, I will keep you updated. Starbucks has seen an inside day right at that 50 exponential moving average. This is also setting up a new trade which could come true or could set us up for a decent trade next week. We also have earnings which is going to potentially get in the way. Tesla again is just moving sideways. Again, I can sit here and say at the beginning of the week that this week or the week looking forward is going to be low on trade opportunity, and you can see why. All of these stocks have really done nothing bar Disney. Disney's really rocketed, which has come out of nowhere really, so don't beat yourself up over that particular stock. And to conclude with, you can see Twitter again starting to fail, down 3%, down $1.55. It's still holding that bullish trend line which we drew in pro over the weekend when we charted this stock for the first time. It's sitting on that 50 exponential moving average, but this 44.54 trigger, I'm soon going to bring it up because you can start to see the failure signals right around this very important key level. I haven't even addressed the fact, again, divergence taking place on both the daily, I'll just put a D here, and also the weekly across all 3 of the markets. Now, that is the most important or pertinent signal taking place across all 3 of the markets at the moment. I'll give you a quick update on that divergence. Again, I'm just going to go to a daily on the Dow Jones Industrial Average, and you can see, if I just zoom out a little bit, you can see that the MACD is starting to bottom. Now, what's going to happen is that this is perfectly primed to give us a little bit of a false buy signal right now. We've already made or started to make that rally. By the time we get up to this resistance level and then we start, if in fact we start to see failure, this is just going to be an added confirmation on the MACD, because the MACD signal is going to move up. It's going to fail below the signal line here, and that's going to be an even greater signal to start looking into short positions. Now, again, this analysis can change very, very quickly, but at the moment, the market is moving exactly how we expect it to. It's struggling, or it's moving higher, but you can see these retracements, these pullbacks, which are, starting to move into the market. It wouldn't surprise me again if we have a pretty green update tomorrow, or in fact, if we just see the market absolutely tank. Expect high volatility. I've been saying this fact for 2 weeks now, and again, it's starting to play out. So please do not get overly involved either on the bullish or bearish side. Please remain focused. Please remain disciplined. Sit on the sidelines. I've addressed these stocks in great detail. I've been analyzing these stocks in my own time, looking to give you updates. But at the moment, there's just nothing there. So when you learn, or when you know how to trade the stock market, there's a time obviously to sit on the sidelines and let the market shake out. That is exactly what you should be doing right now. So I hope you've taken that to heart over the past week. It's very, very hard to do as a technical trader. Of course, you want to be active in the market as much as possible. But there are just some times when it's best to sit on the sidelines and wait for those trades to, of course, present themselves to you. At the moment, we're sort of, we're in the process of harvesting the next crop of trades, which are soon going to present themselves based on what the market is going to give us moving forward. So thank you so much for watching this Wednesday afternoon market recap. If you have any questions, email me success. I'm not even going to write it here. I'll say it to you. success@pivotpoint-trading.com. I look forward to answering any emails that you have for me. If you want to schedule a call, please do that. I'll be happy to call you. Just provide me with your contact details and a time which suits you. Other than that, ladies and gentlemen, I'll see you most likely on the weekend in the Pro Analysis Workshop. Unless the market does something quite considerable on Thursday and Friday, I'll leave it at that for the week ahead. All the best, ladies and gentlemen. Goodbye.